we were talking about FII flows, and I mean, they have been rather undecided on what their stance is, of course, on the Indian markets in the last 6 months. But in the last 3 months, I'll come to Amit first. FIIs have pulled out nearly 4,000 crore worth of equities. Where is this money going, Amit?
Financial services, while they were gung-ho about this sector, FPIs, in the year 2023, they put in 52,900 crores through 2023. In the month of January itself, the financial services sector saw an outflow of 30,013 crores. And in the first 15 days of February, they've 7,536 crores more have gone out of this sector. Construction has seen a net outflow in the last 1.5 months after seeing some inflow in 2023. Telecommunications net outflow in the first 15 days of February 2024, but there was a big inflow in 2023 and in January 2024. The sector that has been a darling of the FPIs in the last 1.5 months is IT and healthcare. Net inflow of almost 4,000 crores have come into healthcare. IT almost 7,000 crores in the last 1.5 months. Consumer services almost 4,000 crores in the last 1.5 months. Services and auto components have been choppy. There was a net outflow last month. There's been a big inflow this month. But 2023, 29,389 crores were put in by FPIs into automobiles and components sector. Now, Mr. Banyopadhyay, do you see the financial services sector coming back into the radar of the FPIs anytime soon? And what is worrying them about the Indian financial services sector, according to you?
Two things before I answer your question. I think you put it very nicely sector-wise, but there are a couple of other factors which I want to highlight. One is the Chinese valuation of Chinese equities have level where I think most short-term funds at least are looking at an arbitrage opportunity or an opportunity in the short term. So a lot of these tactical funds are moving to China. Structural and long-term funds obviously are betting on India, and they continue to bet on India. But some of these short-term guys are looking at China, definitely. So that we have to keep in mind. Second thing, if you look at the data of FII inflows into India, you will find a strong inflow into Indian debt, because I think that is where a lot of action is. And Indian debt is getting included in multiple indexes, and it is of course attractive even after all adjustments. So that is what is happening. Now coming back to the financial services, I think there are some concerns as to whether the financial services returns or financial services performance has already peaked. And from here on, we will see things gradually moving in a direction which is either stable or the credit costs start going up. So I think that is one concern which is there amongst the investors, and that's what they're looking at. Now, having said that, I believe that particularly the PSU banks, that is one space where there is a lot of opportunities still sitting, whether it's in State Bank of India, Bank of Baroda, Punjab National Bank, Canada Bank. I think these are banks which are transformed in a way, and I'm not comparing them with an ICICI Bank in terms of the transformation, but they are definitely transformed from what they were, and I think they deserve better valuation. They have already moved up, but I think there is much more scope for increase from current levels as well.